Well, hello, everybody. Welcome to Real Wealth Network's weekly webinar. This is Ben Erik Smith. I'm the Investor Relations Director and occasional investment counselor. So glad you guys could all join us. Got a lot of people signed up watching today because we've got an exciting show. We're going to talk to our goddess from Cleveland, who handles the Cleveland, Ohio area. And that is going to be the subject all day today for about the next 45 minutes. Then we'll take questions at the end. So any of you watching live, you've got the little GoToWebinar control panel there. Just type in any questions you have, and we will try to get to them certainly at the end. And if it's appropriate, we'll take some of them as we go through the event. So stay tuned. All right. So today is February 24th, 2019, and in just about 2 weeks, we've got our income property showcase and property tour in lovely Tampa, St. Pete. So let me just kind of fixate on this just for a second. You know, normally our events are on the West Coast. We do a LA event and a San Francisco event pretty religiously every month. But twice a year, we like to do an East Coast showcase because it's only fair. You know, we grew organically from the West, but we're spreading our tendrils slowly east. So anyway, we've done one in Orlando last November, and then we did one in May. I think it was May, or actually it was like March or April in Detroit of this year. So now it's our third Eastern showcase. It's going to happen in Tampa, St. Pete. And it's different because instead of just having 2 or 3 affiliates, in other words, market specialists come out and talk about their market, usually we have two or 3 of those and then one educational or special topic. Our Eastern Showcase is an all-day event. It doesn't just run from 12 to 3 or 12 to 4. It goes from 9 a.m. till 4 or 5 p.m. And we've got everybody there, all 13, almost everybody, all 13 affiliates, including Cleveland, talking about their market in a little bit of a compressed format. But it's a great event to go to if you just want to get a little. It's kind of like ordering a sample platter. You know, you're getting not quite the full portion, but you're getting example properties, you meet the folks, you get to see everybody, and you just have to take good notes because it starts to blur together after a while. But it's really, really interesting, really good. Kathy and Rich will be there. They'll kick things off. I'll be there. All of our affiliates are there. And then that's all day Saturday, February 9th. And then on the 10th, we're doing a bus tour of the Tampa market because our Tampa guys, they're the host. So they're going to do a tour. So you have to sign up for them separately. There's a charge for the tour. There's probably going to be about 140 people, 150 showing up for the event, but we only have one bus because we don't want to make them too big. So the tour will have 47 people, and we've got about 30 signed up right now. So if you're interested in seeing Tampa, you can make it out. We'd love to see you, but sign up for the tour pretty quickly if you want to do that because it's filling up quick. After that, our March 9th and 10th event is in the usual suspects, San Francisco and Los Angeles, technically San Mateo. So information will be forthcoming on who's going to show up for that event. So for any of those, any of the above, just register at the URL you see at the bottom there, realwealthnetwork.com/live-events. Or you can just log into Real Wealth Network, look for live events, and take it from there. Alrighty, so our friendly disclaimer, strategies mentioned today may not be appropriate for everybody. Other options not mentioned may be more suitable for your circumstances. Consult the usual experts, your CPA, tax advisor, and or attorney to discuss your situation. Past performance never guarantee future results. Real estate purchases are subject to investment risks, including the possible loss of amounts invested. While every effort is made to maintain accurate and current information, the possibility of errors and or updates always exists. Verify but trust. Trust what we say, but verify what we say. Call around, do some due diligence. Make sure that you feel comfortable with it because real estate's not like a mutual fund. I mean, things happen and you have to be prepared for that. But we do our best effort to make sure that the folks that we look at and work with, they really do a good job of prepping and rehabbing the properties to our published real standards. But you still got to do your due diligence. So trust but verify. Okay, there's me, my smiling mug. I spend about half of my time doing strategy sessions with people, members that call in, and we'll talk about what that is a little bit more at the end. But spend a lot of my other time doing all kinds of things for Real Wealth Network. But I've been investing in real estate for about 25 years. this is a little bit outdated, but I bought and rehabbed 20 properties on the west, and now I'm out east. Not really swinging hammers so much now, but have properties in Ohio and Florida and Pennsylvania. Anyway, it's fun. I like it. So now, who we're going to talk to today is, it's been a great relationship that we've had with Cleveland for, what, about 2.5, almost 3 years now, I think. And 16 years in business. Oh, there it is, right in front of my face. 4 years with Real Wealth Network, not 3, 4. 189 properties sold to our members. So that's a large enough of a sample size to where, you know, if she wasn't up to snuff, we'd hear about it very, very quickly. So without belaboring the point, I'm going to turn it over to you, Cleveland Goddess.
Thanks, Ben. Thanks for having me. I appreciate it.
No problem. Oh, well, this is an interesting slide. There you are. You're the blue star, right?
That's me. I'm the star.
Mm-hmm. Yep. Good deal.
So yeah, Cleveland, yeah. We're up in the northeastern part of Ohio, right on Lake Erie. And I think all your red dots are where your other affiliates are, correct?
Yep, that is correct. Mm-hmm.
Great. Well, I am a proud lifelong resident of Cleveland, as you mentioned, have been an affiliate with Real Wealth Network. This is our 4th year, believe it or not. It's gone by awfully quickly. Obviously, I'm a big fan. I think Cleveland has everything you'd find in a larger metropolitan area, but at a significantly more affordable price, which is why everybody is listening today. We have great schools, great neighborhoods. We are a lakefront city, world-class arts, entertainment, restaurants, and healthcare, which I'll go into in detail. Plenty of options for higher education. And while I realize this usually makes a lot of your listeners jealous, we have very short commute times. So just some of the finer points of my area. We do have a growing economy, which of course is important when you're looking at where to invest. In fact, last year, our economy grew more than both Cincinnati and Columbus. We're ranked 28th largest in the nation, and we are the largest economy of Ohio's metro areas. So our economy grew by about 2.9% last year. And still very affordable. You can buy a fully renovated property in a B area through our company for about $100,000, and that house will rent for about $1,100 a month. So we're pretty consistently at or above that 1% rent ratio that everybody is looking for. Mm-hmm. So strong cash flow, absolutely, and equity growth. Equity's really varied from 3% in the outer ring suburbs to 14% in the city of Cleveland. Wow. That's due in part to the popularity of a lot of the gentrifying urban infill areas right outside of downtown. In fact, we have an investor actually who bought a house from us our first year in business, and she decided to sell this property this year. She was looking to divest and invest elsewhere, and her home went for over asking price and multiple offers just this past week. So we've had strong appreciation year over year. So a little bit more about the economy. Yes, we're definitely moving away from kind of our old manufacturing base and have moved really more into smart manufacturing. But our focus economically has been on healthcare, research and development, bioscience, and technology. I definitely would consider Cleveland to be a leader in research and development and global health innovation. Our biomedical industry has grown from 300 companies in 2002 to more than 700 companies today. We've got over $2.3 billion that's been invested in bioscience and health IT companies since the mid-2000s. So we're definitely, making the transition to a white-collar economy. This slide just features some of the major employers in our area. We actually have the second heaviest concentration of headquarters employment share among the 20 largest metro areas in the U.S. And just last year, Forbes did America's Best Employers, and 14 companies out of Cleveland made that list, including Eaton, Sherwin-Williams, and Progressive Insurance. I always like to feature Health Tech Corridor on one of these slides. Many of your members own homes in and around this area, and we love to tour people in this area when they come to visit us. I highlight it because it really is the epicenter of our economic growth right now. So Health Tech Corridor is 3 miles long and 1,600 acres, and it connects University Circle, the Midtown area, and downtown. But basically, it's a leading biomedical healthcare and tech region. It's anchored by 4 hospitals, one being the Cleveland Clinic. There are 170 high-tech and health tech companies in the area. It's got state-of-the-art labs, incubators, startup spaces. There's $4 billion in development going on there. And the Health Tech Corridor teaches 90,000 plus students annually, actually. So they consider this area to be eds and meds. University Circle having many higher learning institutions in the area and working very cohesively with Health Tech Corridor. Downtown in the surrounding areas has been about $19 billion in aggregate development. We are in the top 10 cities in the nation for college-educated millennials. We see young people moving to cities like Cleveland for employment opportunities while also escaping the high cost of living that comes with living in bigger cities. In my opinion, anytime you see job growth, a solid economic platform, and a growing educated, especially young educated population, I think that makes for a safe bet on investing. And you can see, the sectors that are expecting to grow job-wise are, bioscience and healthcare. So on to affordability. You have $104K as the median home price for your RWN members. Our homes range in price typically from about $80,000 to $130,000 to $140,000 on a single family home. I'd say $104,000 is probably the average. You can see U.S. News ranked us first among states for affordability. HSH, second most affordable metro area in America to buy a home. And just this month, actually, Forbes put out their top best markets for real estate investing. We made the top 5. And they cited our job growth, which was at or above the national average this past year, which is fantastic news. And we see articles like this pretty consistently year over year. I mean, as we're experiencing a bit of a market shift, there can rightfully be, I think, some concern for investors, but Cleveland's always really been a safe bet. I've been doing this for 16 years. I've been through various market cycles, and I can safely say from my experience, we don't bubble, and our price to rent ratio has always been solid. So a little bit on affordability, and I think this is just comparing Cleveland to the rest of the U.S. So we're at about 103, and the rest of the U.S. is about 200. So about half the price on this graph. I think on average, housing costs about 78% less in Cleveland than Manhattan, 68% less than San Francisco, and 32% less than Chicago.
Wow.
So our median rents, I think this is median rents come in at 0.94% of purchase price. Like I said, the only time that we're underneath that 1% ratio is if we're in an A market. Sometimes we're just below. We are consistently trying to hit 8% cash-on-cash returns here as much as we possibly can. Nationwide, obviously, these rents are coming in at 0.74% of purchase price, where in Cleveland it's 0.94% of purchase price. And there's still equity to be made in Cleveland at a consistent rate. As I mentioned earlier, we're seeing 3 to 4% in the suburbs and 14% in the city of Cleveland, but we really are still at pre-recession pricing. There are a couple areas that I would say have hit 2006 prices, but there are still some areas that are lacking, and most importantly, we have inventory. So whereas inventory is lacking in other areas and it's difficult to get good cash flow, we have both here.
Nice.
This just kind of shows a chart, I think, of equity growth in RWN neighborhoods versus the versus the U.S. overall. Neighborhood focus. Okay, so you'll see the center, that's downtown Cleveland. I focus on the inner and outer ring suburbs, and that's where we are really familiar with the rental demand and rental rates, as well as the retail values. I also invest in the city of Cleveland in select areas. We invest in both the west and the east side of town. So when I say west, I use downtown as kind of the divider mark. We invest very heavily in the areas surrounding University Circle and Health Tech Corridor. I remember that was one of my previous slides. Those are areas like Cleveland Heights, University Heights, South Euclid, Shaker Heights. We pay close attention to area redevelopment and what I like to call path of progress areas. So an example of this would be the Metro Scranton area of Cleveland. Oftentimes when our inventory goes out to your members, we'll mention these areas that really only us locals know. You're going to look it up and you're going to see City of Cleveland. But this Metro Scranton area of Cleveland is a great example. The hospital system in this area is currently issuing a $950 million bond to finance their campus transformation. And they are estimating that's going to support over 5,000 new jobs in the next few years. So we just recently went under contract with one of your members on a fully renovated home within about a quarter mile of this hospital for $100,000. And we just accepted an applicant who's a research engineer, had a 753 credit score. So these are the types of areas that I really hone in on. Obviously, I know there's redevelopment happening. They're trying to move people that are working for the hospital onto their this campus that they're investing in. We also invest in, if you look on the west side of the map, Lakewood, Berea, Parma Heights. We have a house in North Olmsted right now. We're kind of scattered about. Some of these areas have primed. Obviously, we're focused on the best areas for price to rent ratio.
Mm-hmm.
Okay, these are some rehab examples. So this is actually the house that I referred to in North Olmsted, which is a west side suburb. So you can see the before picture, the lovely brown color and the older roof. We scraped and painted the exterior of the house. This house has all new windows. We have a brand new dimensional roof. And this is an example of a before and after on a kitchen. You can see, obviously the before is quite dated. I would say 95% of the time we're putting brand new kitchens into our homes. I use either ceramic tile in the kitchen or luxury vinyl plank flooring. Really depends what was existing in the home. If we have original hardwood floors in the house, we're refinishing those. If the hardwood floors cannot be refinished or there's subflooring, we put LVP in. Obviously, everybody loves luxury vinyl plank flooring. It's extremely durable. It's water resistant. But we put in brand new cabinets, subway tile backsplash, Formica countertops. Sometimes granite. Really depends on the price point and location. All of our properties come with a brand new appliance package that includes a dishwasher, microwave, stove, refrigerator, so long as we can fit the dishwasher. You can see we use a two-tone paint, so all of our trim is painted white. Our walls are agreeable gray, which is a nice neutral yet trendy color. And now we'll go over some recently purchased investment properties. Actually, these are available properties. So this first one is located in Lakewood. Lakewood is an A market. This has been the fastest selling suburb year over year in Cuyahoga County. This house has 3 bedrooms and 2 baths, just over 1,400 square foot of living space. As you can see, the monthly rental income, it doesn't quite hit that 1%, but again, this is an A market. This is located about right outside of downtown. This would be, one of our millennial markets. Most of our tenants in these areas are commuting into downtown. can afford to pay a little bit more in rent. This house has brand new HVAC, new hot water tank, a new electrical panel, new kitchen, 2 new bathrooms. We actually relocated the laundry from the basement to the first floor for convenience. It's got brand new flooring, and it's located on a street where there's brand new construction. So you can see the purchase price here is $144,900, and we'll just run through the numbers. If you've got a gross rental income of $1,395, once you take out your expenses, if you're paying all cash, you're at about $959 a month, and if you're financing, you're at about $320 a month. And I have not looked at that return, but I'm going to say that hovers somewhere around 7%, which is still great for an A market and also a fast appreciating market. So this next one, not the greatest picture, but this is actually located in Euclid, Ohio. This is another area. This is on the east side of town, northeast, sits on Lake Erie. Very popular area for us for investing. We've sold a lot of properties in Euclid. They both sell and rent very well. This is a 4-bedroom, 2-bath home with an attached garage, which is kind of atypical. Most of our garages are detached. Homes within a quarter mile of this are selling at about $100K to $115,000. So I think you'll have some immediate equity in this property. This has brand new HVAC as well. And when I say HVAC, we add central air to our units. This is a nice to have, not a need to have, but we do this because 1, we think it helps attract tenants, and 2, we can put it in during construction for less than it would cost you to add it when you go to sell. So we kind of do this on our investors' behalves. So brand new HVAC, new hot water tank, new kitchen, new baths. There will be new exterior paint, brand new interior paint, new lighting. Obviously, brand new appliance package, as I mentioned earlier. Mm-hmm. This last one is actually a City of Cleveland property. This is not far from the Cleveland Zoo and not far from downtown. 3 bedrooms, 1 bath, 1,200 square foot. See, the purchase price is $89,900, and the monthly rental income is $950 a month. After your expenses, you're $277 a month on a financed deal, and about $675 cash flow on a cash on cash. This has brand new windows throughout, new HVAC, new kitchen, new bath, refinished hardwoods. We are nearing completion on the rehab of this property. All 3 of the properties that I just highlighted are available. Mm-hmm. So property management. Our property management company has about 600 properties under management right now. 32 days is the average vacancy. 0% of our company's tenants are Section 8. We do cash pay only. The fee structure, which I think is pretty standard for Real Wealth Network, is 80% of the first month's rent for tenant placement and 8% per month in management fees. The market standard is 10%, but RWN members get 8%.
All right. So, and I can echo that because I used to have a Cleveland place long ago, and I had to pay 10%. So that is market average. So I said it at the beginning, but the silence. We've gotten less questions than we normally do. So if anybody has any questions, please type. Oh, there comes one. So they're coming in. But just type one into the question box down there on your GoToWebinar control panel, and we will ask, and it shall be answered. And we will archive this also. So if you have to go or you want to hear it again, we edit it a little bit. We just kind of, if we have to, and we put it up on the website probably sometime tomorrow. So let's see. Our first question is, do you put in a tenant at purchase? Or let me just rephrase. Can most people expect that it will be tenanted by the time they close?
So we're beginning to market properties for sale when we're about midway through the renovation process. And we will let you know, of course, if it's tenanted or if it's still under construction. If a property is under construction, we write our purchase agreements contingent on the completion of the scope of work and a general home inspection.
Got it.
And so we are working typically with your members' lenders to kind of time that cycle out. So we work directly with the lender to bring an appraiser through. We'll let you know when the property is finished. When a property is finished, we give you finished photos. We will help you schedule your general home inspection. We'll go through removal of contingencies. We begin marketing for a tenant as soon as the house is complete. So I guess the answer to that is it depends. We are about to head into, this is a really good time to start looking to purchase a property. We're about to head into our busiest season, rental season, I should say. In about a month and a half, everyone's going to start getting tax returns before you know it, and they're flush with cash. And so when you're buying in about the next 30 days, it's a great time to start looking for a tenant. It's also a great time because you're going to be coming out of a 12-month lease in the same, market cycle, if you will. So we usually fill our units very, very quickly. Because we're fully remodeled and we're in the best areas of Cleveland, we don't find that there's a big lapse in time between the end of construction and placing a tenant. The only time we see that's a little delayed is over the holidays, and it's sometimes weather dependent.
Got it. Yep. Now, talk a little bit about property taxes. We've got a question: is how accurate is your property tax estimate? So you can address that, but then also just doesn't the county reevaluate, I think, every 2 or every 3 years? Maybe just touch on that a little bit.
Sure. So taxes are a little confusing. The tax rate is dependent on the area. So the city of Cleveland has one tax rate and each suburb has their own tax rate. When you engage with us to potentially purchase a property, we give you all of that information. So you'll know the tax rate breakdown per area. When we are putting together our pro formas, we are taking the latest assessment of taxes. So our taxes are assessed triannually, and they were just done last year. We're taking the latest assessment of taxes, and if we see a fairly large variance between what they're currently assessed at versus what we're selling for, we allow for about a 20%. We mark up the taxes on the pro forma about 20%. So you're getting financials based on the taxes potentially raising versus what they are currently. So generally, you'll be getting a little bit better cash flow up front. We have no way of knowing if the school board's going to come in and contest taxes at any point after we transfer. What we do on your members' behalf is I hire an attorney every January, and we have him go in and contest taxes on properties that we've sold to your members based on our purchase price. He is successful the vast majority of times in getting those taxes reassessed, and most of your members will see a refund. But it's very difficult for us to be 100% accurate because we don't know if the school board's going to come in and reassess the taxes. All we can do is give our best estimation of what we believe that they'll be, and then of course have our lawyer go in and try and contest taxes to, at minimum, get you a refund and get you a break for as long as we can.
Right. Makes perfect sense. Okay, so I'm going to kind of jump around because we just got the questions. Just as soon as I made that second plea for questions, they just came pouring in. I mean, it's just like I've got like 30 now. Okay, so this is an easy one. When the unit is vacant, are there property management fees?
There is a property management fee. And again, if anybody's interested and they want to engage with us, part of the information that we provide in our packet is frequently asked questions for the property management company. We will give you a sample PMA, so you could look at any and all fees that are associated with managing the property, and a contact list for everyone at the property management company.
Okay, but so it is like if a tenant moves out in January and a new tenant moves in March, for the month of February, there is still that 8% fee.
No, it's not an 8% fee. And I apologize, Ben. I actually don't know what it is. It's fairly nominal, but they're keeping the utilities going, and
Right.
they have several other functions during that time period. But
Okay.
I can definitely get that answer for you.
Okay, but it's not. Some property
No, it's
managers like, hey, it's zero, so it's not zero, but it's not 8%. It's somewhere in
correct. That's
between there.
correct. And I'm really
Okay,
sorry that I don't know what that actual fee is.
it's okay. Now, I think I'm going to give your voice a rest, and I'm going to answer this next question. Then you can just
Okay.
add to it. Got a question about where could I find attractive purchasing options for Airbnb? Okay, so these that's a whole different ball game, right? I mean, essentially Airbnb or VBRO or HomeAway.com, vacation rental, short-term things generally tend to be in, lakeside, fancier, better kind of neighborhoods in general. So the neighborhoods that you're buying and renovating homes in are more designed, bread and butter, blue collar, working class type of neighborhoods generally aren't going to be the best Airbnbs. So we don't really dwell in that realm. Would you agree with that, or do you occasionally see something that might actually work for that?
Interestingly enough, I mean, I know local investors that are doing some Airbnb. I think
Hmm.
that it would make sense in the urban infill areas that are right outside of downtown, walkable
Hmm.
areas. Um, I, I sell what I'm experienced in. I'm not experienced in that market. But most certainly, if somebody was interested in attempting an Airbnb rental, I could give my best recommendations on, what type of property and where they would want to buy, so that they could have the most favorable outcome if they were
Right.
trying that.
Okay. And this is a interesting question. What do you think of the following areas? Brooklyn, Old Brooklyn, Clark, Fulton. Does that mean anything to you?
Yep, I like
Okay.
them all. They're great for cash
Oh.
flow. I
Okay.
haven't had a whole lot of luck getting inventory in Old Brooklyn, but we often get inventory in Clark Fulton and also Brooklyn. I would consider Clark Fulton to be probably C plus, however.
Hmm. Okay. Is there an incentive for the property manager to retain tenants rather than get a new tenant? And that's an interesting question because we have another question that dovetails off of that. Like, what is the average tenure? Like, or actually, the question was, what are the lease lengths? Do you usually do 1 year lease or do you sometimes do longer than that?
So we usually do 12-month leases, but we have
Hmm.
found that on average our tenants are staying 2 years.
Okay.
There's incentive for them to keep them full for a lot of reasons. I mean, their um, success and reputation is based to some degree on vacancy,
Hmm.
and it takes a fairly big toll on the management company to constantly be leasing units as well. In our market, anyway, leasing agents are paid 50% of the monthly rent. So with Real Wealth Network members only being charged 80%, the property management company is they're only collecting 30% of the first month's rent to place a tenant. So it's not as though it's a big source of income for the management company.
Right. Right. Okay. Yeah, it's an interesting thing that I sometimes get that question a lot. It's like, okay, well, the property management company, they want the tenant to leave so they can get a new 75% fee. But in my mind, I'm like, yeah, that I just think that it's easier for everybody, including the property manager, that the tenants stay because it's a lot of work for everybody. I mean, for the owner, of course, turnover is really what kills the investment. It's like you really want people to just stay because as soon as a tenant leaves, you've got 2 to 6 weeks vacancy, and then you've got to paint stuff and everything else. So I don't
Correct.
know. It seems to me that they would be not necessarily financially incented, but just wouldn't really be all that interested in having turnover if they can avoid it.
That's been my experience as well.
Yeah. I think that now even the first tenant, when somebody buys a property, their
Mhm.
first tenant is also 75% of 1 month. Is that correct?
The first 10 is 80% of first month's rent.
Okay, I'm sorry, 80. Okay,
Uh-huh.
got it. Because for a little while, someone was asking if the first tenant was still was thrown in or not, but that's not the case. Okay.
To my understanding, that's standard with all the affiliates. I could be mistaken, but
Right. Yep. No, I think you're right. You're absolutely right. It's something that long ago you once did. And let's see. Okay, we've got. I'm just going to pause for 1 second because I've got a lot of questions that are kind of some basic stuff, which is fine. They're very good questions, but let me just kind of address some basic things. First of all, we've got a lot of questions about who you are and what is your name, and she's got to have a name other than Cleveland Goddess. And there's a reason we're not trying to be mysterious on these webinars. But the way Real Wealth Network is set up is that we don't like to use names on the webinars. And the reason for that is we want everybody, all the members, you join Real Wealth Network for free. You get all this education. We don't charge our members anything. And what you want to do is hook up with an investment counselor. I'm one of them. We've also got Joe and we've got Aristotle. There are three of us. And you get an IC, investment counselor, and you have a question. A strategy session with them. It might be as short as 10-minute conversation. Usually they're about 25 to 35 minutes long. And we discuss with you, hey, what are your goals? What do you want to do? What markets do you like? We try to help people narrow down the available choices. And then say somebody says, okay, based on the webinar I heard, I really liked Cleveland. That would be the market for me. And then we will then, at the end of that call, send the contact information for Cleveland so that you then can reach out to her directly and you're just working directly with them. And some people, they want 2 or 3 markets, and that's fine. So that's why we're not trying to be secretive or mysterious, but anybody could be listening to this webinar, people that just would be calling and wasting a lot of your time. So we like to do that qualification. We're qualifying you a little bit and we're helping you focus as to where you want to go. So that's why we don't use people's names. What does Real Wealth Network get out of this? Well, when somebody is referred to a market, say we have that strategy session and I refer Sally Sue, the member with whom I'm speaking, to Timbuktu, Houston, and Cleveland. And Sally Sue ends up buying 2 properties in Timbuktu. And the way Real Wealth Network makes our money is the affiliate or the property provider in Timbuktu pays Real Wealth Network a broker-to-broker finder's fee. And they pay it. The investor does not, and that's how we make our money. So that's the scoop. And what about duplexes? Do you ever see duplexes?
I do. They're not as common as single family, but I do. We actually have a triplex for sale right now, and I have a duplex coming in City of Cleveland. The triplex is located in Lakewood, A area. So I have lots of inventory right now. Good inventory.
Okay. Nice. Okay. And out of the inventory that you have, I don't mean to put you on the spot, but if you were to ballpark, how many different properties do you have available right now? What would that number be approximately?
We probably have 12 properties available right now and about another 3 to 4 incoming, probably in the next 2 weeks.
Okay. That's great. And so you do see duplexes, but they're far and away the exception to the rule, but you see them occasionally and they probably go pretty quickly.
They do. Yep. It seems to be a very in-demand product.
Here's another question about an area. What about Willoughby?
I don't do a lot in Willoughby. That's kind of far east for me. I do know it to be a great suburb. They've got a good school system. But I haven't sold any properties in Willoughby. About as far east as I go is Willowick.
Okay. Gotcha. All right. Okay. I asked this question and it was just been answered. All righty. How many properties do you have? Let's see. A lot of questions. Is snow removal and lawn care part of the PM fee?
So on a single family, the snow removal and lawn care is on the tenant.
Okay. Got it.
If your property goes vacant, then there's a fee. On a duplex, typically that's the responsibility of the owner, and obviously that is the PM's responsibility to arrange for that on your behalf.
Got it. Okay. That makes perfect sense. Yeah, the tenant needs to pay the utilities, they pay the water, they do the lawn care, they do the snow removal, and the only exception to that is obviously with a multifamily like a duplex, because then there's common areas. Okay. Now here's another question. I've gotten two questions on about banking and banking relationships and lenders. Yes, we have like 4 or 5 lenders that we happen to recommend, mainly because our members have used them and had really good luck. And they're on the website, Real Wealth Network, over on the left under resources. Hover the mouse over resources and select lenders, and like 4 or 5 different lenders come up. And I know that Cleveland likes a couple of them in particular. There's Chemical Bank in somewhere in Ohio, and then there's one other that you use, and it's best to go with one of them, because a lot of times there are banks out there, notorious big banks, that are really slow and derail deals. So best to go on our website and get pre-approved with one of the lenders there, just so that when you reach out to affiliate X, Y, or Z, you can confidently say, hey, I'm already pre-approved with one of your lenders that you like. Okay. Do you happen to know what the current vacancy rate is in Cleveland overall, or at least within your world of 600 homes?
It's tough because the management company doesn't just manage my homes. And they work on the Appfolio format. So it's tough to have them pull out, it'd be easy if my company owned them all, but once we sell them to members, it's hard to pull those addresses and look at the vacancy rate overall. First, I don't know the overall vacancy rate in the city of Cleveland. But related just to my property management company, because they manage for more than just my company, it's tough to get that exact data. But I know it's something that we'll need to do for accuracy's sake. Yeah.
Yeah, understood. That attorney that you mentioned that reassesses taxes, does he just take a cut of whatever the reduction is that he's able to get?
Yeah.
Is that how that works?
Contingency.
Okay. So like if your taxes are, I don't know, 1,000 a year, and he gets them lowered to 600, then he takes a portion of that $400 saved.
That's correct. So, every year, people say, oh my gosh, I just got an email, or I just got a letter from the Cuyahoga Board of Revisions. What does this mean? And we'll let them know, we're doing this on your behalf. So, we are contesting taxes from when my company owned the home. So based on my purchase price. So really, I'm his client. I'm just passing the refund on to your clients.
Right. Okay. Here's a question. The 8% is a great deal. Do I have to buy the property from you in order to get the property management rate?
Well, it's 10% market. So anybody that's not Real Wealth is being charged 10% from the property management company. So the 8% is because you're a Real Wealth Network member.
Right. But I think what he's asking is, if he has a property and wants you to manage it and is a member, would he get 8 or would he get 10?
The only thing I'll say, the short answer is yes. The caveat is where it's located. There are some areas that we do not want to be managing in. Yeah. And so, we'll be happy to take a look at the address and tell you if it's in one of those places.
Okay. All righty. Let's see. Do you know where the Amazon facility is going in relation to downtown?
Euclid.
Okay. And that's, as I recall, we can go back to the map maybe, but it's on the east side, right?
Correct. Yep. East side. And I've got 1, 2, 3, 4 properties available in Euclid right now.
Okay. And that's Euclid, EUCLID. All right. Here's a question. We're newbies, and my husband and I plan to come visit from New York City. Would you give us a tour of the area to familiarize ourselves of the neighborhoods? So maybe address that, like how that works.
Yeah, absolutely. So we host tours all the time. Obviously, you would work with an investment counselor first. They'll put you in touch with me. You could give me some prospective travel dates. Generally, what we'll do is we'll have you come to our office, which is in Lakewood. I'll give you a market overview, an overview of the company and our processes. We'll put a map together of the properties that we have available. You'll usually go out with one of our sales reps. The tours are typically 3 to 4 hours. We try to hit as many suburbs as possible just to give you a flavor for the types of areas that we're buying in. And we try to show you homes that are in various phases of construction and get you into a finished property so that you can see our finish level.
Yep. Makes perfect sense. I mean, Real Wealth Network does property tours, like we're doing one in Tampa later or earlier in February, but they're the official tours where you've got 20, 30, 40 people, but they're too few and far between. I certainly would never advocate anybody wait for that. So you can just have a strategy session with your investment counselor, narrow it down to 2 or 3 markets, call those 2 or 3 markets, kind of narrow it down to 1 or 2 just for your own peace of mind, so your head doesn't explode with too many choices, and then reach out to that particular affiliate. And if you can, we highly recommend you do exactly what the couple from New York City just suggested. Contact the affiliate and go out and see it. Spend half a day there driving around and seeing the neighborhoods yourself. It's just way better than buying just based on pictures and word of mouth, which is all very good and helpful, but physically being there and seeing who you're going to be dealing with and seeing the neighborhoods is worth its weight in gold. Question: what if we want to go with our own property manager? They're perfectly fine. They can do that if they want to, right?
Oh, so one of our commitments is that we offer a warranty on our scope of work. And naturally, what we find is when tenants are moving into properties, that's, when you first get all the phone calls, my closet door won't shut, this is going on, that's going on. It's not necessarily a reflection of the quality of the rehab. It's just a part of what it is. And so because we interface with property management, we share internal documents with them so they know every property that we're selling. They know the names of the people that are buying the properties. They reach out to them with PMAs. I am copied on every maintenance request that comes through on my owner's properties so that I can, review what's happening. I can decide if that's, occurring under our warranty period, if it's something I'm responsible for. I'm interfacing with the maintenance at property management to decide, if there's a maintenance item, especially a costly maintenance item, how it should be addressed. So we really prefer that you stay with our management company for that reason. It's basically because I'm acting on your behalf in this market, and I do that very cohesively with them. So,
yeah, my experience has been, and I have switched property managers. Maybe I would buy a property from affiliate X in market Y. And it just makes sense to go with the property manager that they are comfortable working with because they've got the relationship. And in many cases, it's the same affiliate also manages the property. And that's not the case here, but it just makes sense. But you're certainly not forced to. I mean, a year later, you could switch, I suppose, although based on what you just said, you'd prefer that they not. I totally understand that. But okay, let's see. I would like to purchase 3 properties in your market at the same time or within a month, leveraging financing. In order to do this, they would have to come up with a tenant in place at the time of closing. I guess maybe the lender that this person is using requires that it be an actual income producing property at the time they close. Is this something that you can accommodate?
Yes. I mean, we work with 1031 buyers all the time. I mean, we've sold 10 properties at a time to one buyer. That's not an issue. And it's also not an issue. We've had a lot of people with lenders with those requirements, or they have debt to income requirements that, require that they have a tenant in place. So that's not an issue.
Okay. Gotcha. I'm interested in the Lakewood area. Can you mention how that area is better than HTC area? Do you know what HTC is?
Yeah, Health Tech Corridor.
Oh, yes.
So Lakewood's on the west side. Health Tech Corridor, the areas surrounding that are on the east side of town. So really just different geographical locations. Lakewood taxes are a little bit lower than the east side. As I mentioned, it's pretty tough for us to get inventory in Lakewood. It's actually a miracle. I've got a couple of properties there right now, just because the prices have really skyrocketed. what else to tell you? It's 5 or 6 miles, I think, into downtown. Um, it's north, so it sits on the lake. And I know it's just been a very popular area. I don't know what the appreciation has been there. I want to say it's been about 8% year over year. I don't know where we'll be here in the next 12 months, but it's been tough to get inventory, and moreover tough to get inventory that cash flows just because of where the prices have gone. But the rents really have been appreciating as well. So both the triplex and that single family that I had during the presentation are great buys in Lakewood.
Mm-hmm. Let's see. If single-family rental homes are so cheap, aren't most people who can afford to buy a home, meaning that the rental pool is more likely to be higher risk on paying their rent? That's kind of a strange question. I think what they're asking is, gee, if the houses are so cheap, why aren't people buying them? And increasingly, what we're seeing is we're becoming more and more of a rental nation. And it's kind of a millennial thing too. People just, millennials, and this is a gross generalization, but a lot of them they just don't want to have the responsibility and be tied down to a particular home because they want to be able to up and move with 30-day notice. So a lot of people who can afford homes are renting. And on top of that, you'd be surprised how many people, sure, they could afford the mortgage on a home, but they still are going to have a hard time coming up with 10 or 20K for a down payment. So that's my answer to that. Let's see. Do you want to add anything, or is that?
No, I think that's totally accurate. I mean, that's obviously the advantage of real estate investing. You're taking advantage of that scenario. And I think that you're correct. I think things have really shifted in the last few years. I mean, I think before it was people that they couldn't get financed to buy a property or buy a home. Now I think that there are plenty of people who are financeable who could afford it, but choose not to. And they prefer a more transient lifestyle. They don't want the responsibility. There are several reasons for that.
Right. Yep. If somebody comes in and wants to do one of those kind of private tours, is weekends on the table? You do it on the weekends as well?
Yeah, we'll do it on a Saturday. I really prefer not to do it on a Sunday, but we can accommodate that if it's necessary.
Okay. Let's see. Are there any guarantees for the rehab properties? If yes, how long?
6 months on the scope of work. So as I mentioned, any property that you purchase through us will give you a scope of work, and that gives a detailed overview of what we're doing in terms of the rehab. Anything that's on that scope of work, we warranty for 6 months.
Gotcha. Okay, going on to property management for a second. If your company or the company that you utilize for property management is managing 600 properties, how many property managers do you have managing those 600 properties?
Well, I think there's 10 employees. There's 3 managers. They obviously use leasing agents. So in our market, I don't know what it's like in other markets. In our market, leases have to be signed. First of all, property management has to be run by a broker, and leasing agents have to be licensed with the state, and they are the ones that actually sign leases with tenants, which is another reason why, when people are asking why they're being charged a percentage of first month's rent, well, somebody has to be paid to do that, to show the property, repeatedly, to screen the tenant, and then to sit and sign leases with the tenant. And then a lot of the leasing agents that are doing that, they are actually paying a co-broke back to their brokerage. So, their small 50% of first month's rent, they're actually sharing a portion of that 50% back with their brokerage. So, how many people?
Okay.
There's lots of leasing agents, managers, in-house maintenance, and administrative staff.
Yeah, I think the key would be the you have 3 managers at least.
Yeah.
Because that's 200 properties per person, but it's not like they're out there swinging hammers. They've got a whole support staff, an in-house maintenance team, and then the leasing agents are the ones pulling the properties off the MLS and meeting the people there.
Correct.
Okay. Let's see. Okay, here's an LLC question. And I think I can answer this. Should I open an LLC in Ohio, or can my California LLC hold properties in Ohio? Which is less expensive for tax purposes? Well, I don't know about the tax thing, But I mean, it's so different every situation. But any LLC you have has to either be based in the state where the property is, so it would need to be an Ohio LLC, or if it was in a different state or a foreign LLC, you just authorize it to do business in Ohio. Like that property I used to have, I had an Arizona LLC, and I just filled out a $60 form and authorized that Arizona LLC to do business in Ohio. And it did that way. I didn't have to open a whole new LLC. Okay, why did you switch from the previous management company to the new management company? Because there used to be a different one.
Yeah.
Can you touch on why you did that?
Yeah, absolutely. The previous management company did not have in-house maintenance, and it was my hope always that they would eventually have in-house maintenance. And as I mentioned, I try to be my investors' eyes and ears here on the ground. And I really try to do that for the life of the property as much as I possibly can, because, my client relationships are very important to me. And so anytime you have outsourced maintenance, typically you have inflated costs. So what we saw was, a tenant would put in a work order request, and if my firm wasn't paying very close attention to what that work order request was, whose responsibility it was, what a reasonable associated cost for that would be, my owners were getting hit with what I consider to be really high charges. And so, I was basically I was having to oversee all of that, which was stressful, and, a second full-time job, which I don't need. Right. And, people were incurring costs that I didn't think were necessary or that were inflated. That continues to be the case. So I'm trying to move people over to the new management company. It's a lot easier when you're charging maintenance out at a certain dollar per hour versus calling a third-party vendor out to a house to make assumptions about the work that needs to be done.
Yeah.
So it's not to say that they're not a qualified property management company. They are. I still, have a good relationship with them. It really had a lot to do with the fact that the new management company has an in-house maintenance department. They also have an in-house project manager. So he's actually able to take a look at those work order requests and assess the situation and figure out the lowest cost solution for what's going on, which is really important for your bottom line.
Yep. Understood. Well said. Okay, how many properties, and we got to wrap up pretty quick. It's the top of the hour here, but how many properties are you buying and rehabbing per year on average?
It depends. I think we're at about 100 and I think we're about 110 last year.
Wow. Okay, that's pretty good. Almost 10 a month. When the time comes to sell the property, will you help the investor sell it, or do you recommend that they? Okay. Yes. Answer yes. Okay. And Real Wealth Network will help also. You have a couple options. You can go out and find a realtor if you want, or you can just go back to the person, the affiliate that you bought it from. Either one works.
Yeah, we are licensed agents. I've got licensed agents on my team that help with that. As I mentioned earlier in the presentation, we just listed for someone divesting. She bought about 3 years ago, so one of the agents on my team sold that property for her.
Yep. Okay, I hesitate to ask this because it's a little bit of an open-ended question, but see if you can maybe just answer it fairly briefly. Okay. What are the biggest challenges you face as a property manager, and how do you deal with it?
The biggest challenges in property management?
Mm-hmm.
Oh, I mean, it's tenants and toilets, right? It's maintenance, and it's just making sure that you have quality tenants and interestingly enough, you can screen for income and you can screen for evictions, but you can't screen for personality.
You're right.
And so we have some really high maintenance, we can have some really high maintenance tenants. And obviously, maintenance is always the other big factor.
Yeah, for sure. And speaking of this, I mean, some homes are pretty old, early 1920s, 1910s. What are you checking or how are you, do you ever have worry about like, what's behind the wall, the foundation settling and stuff? I mean, do you do anything different because you're dealing with older housing stock?
Yeah, definitely. Obviously, we do a pretty thorough evaluation on the front end. No, we cannot
Hmm.
see behind walls and we cannot see under the ground. We try to do our best due diligence, at the front half of our renovation process. I didn't really touch on the point of sale, and I should if I have time to do that. I'll try and go through it
Sure.
very quickly.
Hmm.
But in many areas on the east side of town, they have a system called the point of sale. I tell people think of that like a municipally led HOA. So the city actually comes in before title transfer and they will do both an interior and exterior, some just an exterior, but many both interior and exterior inspection of the home. And they will create a violations list on the property. And either the seller needs to cure those violations or the prospective buyer, which is me, has to assume the violations and make those repairs in accordance with the city. And so we have to pull permits, obviously, with the city, and the city inspectors come out and they look at all of that work: plumbing, roofing, electrical, windows, concrete, and on and on. So, we in many instances have an added layer of an inspection during our rehab process. But I mean, to go back to your original question, we do a really heavy lift in rehab. I mean, the vast majority of the time, we're changing out HVAC, we're changing out roofs, we change out windows. There are times where we're rebuilding foundations, we're putting up brand new garages, we're replacing cement. We bring all the electrical up to code. We bring all the plumbing up to code. The one thing I'll say, in the area that we've seen probably the most consistent with maintenance has been plumbing, and that's been plumbing back behind the walls, plumbing as a result of tenants putting a lot of stress on the lines or putting things down drains that they shouldn't, and in very limited circumstances, plumbing out to the street, but that can be really expensive. So we did discover that the city water department, in conjunction with, I think it's Dominion, is offering a plumbing insurance program. Our property management company knows about this. I highly recommend it. You can insure the interior plumbing lines in your house and the exterior plumbing lines for like $4 each a month.
Wow.
Um, this means if, God forbid, your sewer line collapses and you have this insurance in place, they will come out and replace up to $5,000. So, they'll dig, replace the pipe. Um, it's
Right.
it's a huge benefit for,
Oh, yeah.
seemingly low cost. So,
Right. Okay, cool. No, thank you. And I appreciate you going over the POS thing.
sure.
And so when a repair is tenant caused, is the property manager pretty good about determining that and charging the tenant rather than charging the owner?
Yeah, that's why, again, with a new management company, kind of having a project manager and having, maintenance, yeah, they're really looking into that. And you can imagine when
Right.
you've got 600
Hmm.
properties under management and you've got, tenant work order requests, it's really easy to just like hit a button and send somebody out. But I mean, sometimes you really have to delve into the issue to decide who's responsible. And it's those little charges that add up. So they
Mm-hmm.
have been fantastic in that regard, and they've taken
Yep.
a lot of burden off my shoulders. Yeah.
Good deal. Low stress. That helps. All right. Final question, and then I'm just going to wrap this up. Do you renovate all the kitchens in your properties, or do you just clean up the old cabinets, fixtures, and appliances?
It's
Or is it a case
no,
by case?
yeah, I would say 95% of the time you're getting a brand new kitchen. The
Mhm.
houses that we buy are old and typically very distressed. It's very rare that I can save a kitchen. On occasion, like I have one right now that we have for sale in University Heights that has a really great kitchen in it with granite. So of course we're going to keep it, but we always put new
Mhm.
appliances in. But the
Yeah.
vast majority of the time, it's new flooring, new cabinets, new counters, new fixtures, new paint, and new appliances.
Perfect. All right. Go ahead and advance a slide for me
Yep.
if you don't mind. And we will wrap that up. I kind of beat this one a lot at the beginning, but February 9th and 10th, our East Coast Showcase in Tampa, St. Pete on the 9th with all 13 affiliates, all doing a compressed presentation all in one day. And then on the 10th, we have a tour of the Tampa, St. Pete area in a bus, looking at properties from that affiliate, some renovated, some in the process of being renovated. If you're interested, sign up. The tour is filling up quickly. The event is about 70% full. but that's going to be a good one. And then March 9th and 10th, we're back on the West Coast, and we have our normal, monthly rotation with an income property showcase in San Mateo and Los Angeles. So go ahead and advance one more for me, if you don't mind. All right, so we had a lot of new people on today's webinar. I kind of talked about this, but let me just say it again. If you're interested in learning more about this market or any market, contact your IC, investment counselor, today. If you don't have one, that's okay. Nobody does when they first start. It's a free thing. It's a 20-minute to 40-minute conversation, very conversational. We'll kind of help you. What are your goals? What do you want to do? Just go to realwealthnetwork.com/connect. Obviously, you're most likely already a member because you're listening to this webinar, but then you just book a strategy session and you'll have a quick call with Kathy first, Kathy McBride. She'll do what we call a pre-SS session, and then she'll book you within a couple days or a week at the most, and then you will have full access to reach out and speak to Cleveland or any other market. And one last question was, how can we get the property management information to review? Well, all you need to do is just reach out to your IC, email them. It's Ben or Aristotle or Joe, or just if you don't have one, book a strategy session, and we'll put you in touch with Cleveland, and you can get the PM agreement and you can review it. You can read it again and again and again. So that's generally how it works. I don't think there's another slide, is there? Is that the last slide? I guess we'll find out. But anyway, that pretty much does it. We are done. Thank you so much. Sorry for running a little bit over, but we had a lot of questions, a lot of very good questions. If you want to join or want to do anything, feel free to just call us, email us. We do this every week, Thursday at noon, 3 p.m. Eastern. My name is Ben. I really appreciate you guys joining us. We will do it again next week. And thank you, Cleveland. Appreciate it. Good job.
Thank you.
And all righty, we'll see you in a couple weeks down in St. Pete. And thank you to everybody for joining, and we'll see you next week. Bye-bye.